Okay, unless objections, I'm going to go ahead and start. Hello, welcome to everybody who's here. Just a note that we're going to wait a minute to allow folks to move into this space and get started in just a minute. All right, I think we'll go ahead and get started with a little bit of housekeeping here. So hello to everybody and welcome to our third session actually of the 2021-2022 Learning Exchange Series. I'm your host, Kylie Clay. I'm the Associate Director for the Forest Carbon and Climate Program at Michigan State University. We're very pleased to lead the Learning Exchange Series in partnership with the Forest Climate Working Group. The Forest Climate Working Group is a diverse group of forest interests with over 60 members, including landowners, industry actors, conservationists, academia, and those active with carbon markets. The group has worked together for more than a decade to advocate for state and federal policies that work to ensure sustainable forest use and prevention of land use change. We're delighted to announce the full year's lineup of speakers here on the screen. It's a bit small to read, but in just a minute, I'll add the link to the webpage in the chat so you can check out the full list of speakers, previous and future in more detail, and including videos and video recordings and presentations from our two earlier presentations. So this year we have three major thematic bins. First being voluntary carbon markets. Second, changing landscapes of climate and forests, and the third, emerging science. So for today's presentation, we are very happy to have here Melissa Kreye and Calvin Norman from Penn State Extension. They'll give a presentation called Landowner Interest in Forest Carbon Market Opportunities in the US. So today is the third and final presentation as part of the carbon markets group of presentations this year, and specifically today we'll focus on opportunities for non-industrial landowners in the United States. So before we begin today, just a few details to share. First, to automatically receive registration details if you're not already receiving them, and information regarding upcoming webinars, please email forestc@msu.edu to join the mailing list. This session is being recorded and will be posted on the web alongside any supplemental resources, such as the presentation slides, within the next week or so, probably before then. If you've registered, you'll receive an email letting you know when and where to find those materials. This session today will, as usual, be followed by Q&A. So on the bottom of the Zoom interface, you'll see the chat, and you can offer your questions at any point during the presentation. We will compile those and time permitting, ask them in the Q&A session. If you're calling in, or if you prefer, if email is easier, you can always email your questions to us, again at forestc@msu.edu. We are very happy to have any and all questions. A couple of other points of note. Attendees today are qualified to receive 0.5 CFE credits from SAF. This will be automatically communicated to SAF, and you'll receive that credit if you have registered with your information on your SAF account. If you have questions about this, please reach out to us at our email, forestc@msu.edu. Also, attendees are qualified to receive 1 CEU credit from ISA in either the Management Certified Arborist or Municipal Specialist category. If you'd like to receive ISA credits, please reach out to us at forestc@msu.edu, and we will share the event code necessary for that with you. So that's all that behind us. With that now, Melissa and Calvin, will you please go ahead and share your screen and begin today's presentation?
Fantastic. Thank you so much, Kylie. That was a great introduction. Does it look good? Presentation mode? Okay,
Yeah.
Fantastic. Well, yeah, Calvin and I are really happy to be here. Glad to be invited. We are both in extension with focus on forestry and wildlife. We kind of fell into the whole carbon markets thing due to consumer demand for information. So we come very much from the perspective of forest owners in all their complexity and all the things that involve private forest lands. And this is definitely a hot topic in Pennsylvania. And so we've jumped in with both feet, and we're starting to do some research. We're starting to do some education. And so we're just going to let you guys know who we are, what we've been doing. And if you don't know much about private lands and who these landowners are, we have some information about that too. So get everybody up to speed. Yeah. Well, it automatically advanced. So, okay, so today we're going to talk about just an overview of who are these non-industrial private forest owners in the U.S., talk about some recent research on landowners and carbon markets that I've been working on. Calvin's going to talk about some carbon market providers that are targeting the forest owners that we work with, and what that is looking like. And then we're going to talk about our future extension programming on this subject in the future. So yeah, this will be the stuff that we'll be covering today. Now, I'm sure most of you know that much of the forest land in the US is privately owned, and we are growing more wood than we're cutting, and that has been estimated to be offsetting up to 16% of US emissions. So I think this is an important thing to keep in mind about what is the status quo condition of private forest lands. And that private forest lands do have a potential role when it comes to climate regulation and climate change mitigation. I wanted to let anyone know who does not know that if you want to learn about landowners, that the National Woodland Owners Survey dashboard is a fantastic resource. You go in, very simple drop down types of inputs, and you can get all kinds of information about forest owners anywhere in the US. And so if you want to get to know your forest owners in your state, check it out. It's really great. I'm going to present some key parts of this survey as they relate to carbon market potential, implications for carbon markets at a national level. So this is going to be all non-industrial forest owners nationwide. And I have this data on Pennsylvania, but I figured I'm just going to broaden it for this audience today. So forest owners are actually very heterogeneous, but the one part where they are homogeneous has to do with their demographic characteristics. Owners are generally older, 55 to 75 years of age. They've usually acquired enough wealth in order to purchase forest land at this point. They're usually male and white. So very heterogeneous in this context. And there are implications when we think about equity issues when it refers to the emergence of carbon market opportunities. But I'm just going to lay out, this is the general characteristics of forest owners. Ownership sizes cover the whole spectrum. The number, or the percent, I should say, of owners with less than 10 acres is very high. It's up to 60%. This is not the overall national trend. There are in some places where there's development occurring, there's higher parcelization, but there's other rural areas where parcels are coming together. So, in Pennsylvania, we are not losing forest land. It's more like it's just changing hands all the time, which is the challenge we have here. But forest owners are anywhere between 10 acres up to 100 acres. That's the majority. So when we think about carbon markets and acreage sizes, this is the kind of acreage sizes we're going to talk about. Land tenure, very, very important. So most owners intentionally purchase forest lands for private personal reasons, which we'll get into. Very few come into forest land, either indirectly. So if it's being inherited or given to them, there's enough though that, to pay attention to. And then the number of years that they own forest land is anywhere between 15, 20, 22 years. And that has implications for things like what kinds of contracts they might be willing to sign. And of course, we know with carbon markets that longer contracts have been the status quo. And of course, when it comes to storing carbon for long periods, ensuring land tenure, land transfer can potentially interfere with that. So this is some aspects that are important to consider when it comes to private lands. Private owners are really interested in being responsible land stewards. They say things like, I want to do right by the land. And many agree with things about protecting water quality, protecting wildlife, protecting biodiversity. So the motivation among many forest owners is very positive. Now, motivation and intent is not necessarily the same as being able to make that actionable. And that is what, assistance, technical and financial assistance is there for. But it is good to know that there is this strong ethics behind responsible forest ownership among many forest owners. Trends in harvesting. There is nationwide, people are generally choosing not to harvest over time. And if this particular survey, and I'm trying to remember, I know in Pennsylvania, we ask if they harvested in the last 5 years, yes or no. I can't remember if that's the same question here, but harvesting usually only occurs a couple times in the land tenure time span. So it's done infrequently. And it's also going to be a little bit different depending if you have a natural forest versus if you have a pine plantation kind of planted forest. But yeah, so people are harvesting, are harvesting, but we're still growing more wood than is being cut. So there is a natural sink occurring. A lot of owners are not looking to their forest to make income. It's either because they can't, or that's not their intention. So understanding the difference between those two and realizing they can both kind of coexist at the same time is an important concept. But you can see here that income, regardless of whether or not they want to make money from it, or they don't care, they're not really getting a lot of money. And this has implications for how much they can afford to manage that forest. So this is an important slide. This is also an important slide. Management plans. Most forest owners do not have a management plan. Management plans traditionally were intended to help support sustainable harvesting by helping create a schedule of planning and where you're going to rotate harvests, when and where. And with private forest lands, the scales are not that large. They're not intensively harvesting. They have more amenity values, and so there really isn't any motivation to get a management plan. This has implications for confirming additionality when it comes to carbon markets. How can we say there's been a real change if we don't know what the actions were before? And so some carbon market providers have been thinking strategically about maybe how to circle around this. And so I, as an educator, am interested in getting more management plans on the books, with the recognition that there is a large interest among owners to be better land stewards, and helping them recognize that management plans can help them get there, even if they're not harvesting necessarily. Sources of advice are diverse. A lot of people say they don't qualify for advice, probably because they don't have the acreage sizes that makes them necessarily need to pursue advice. But they're reaching out to state professionals. We have county foresters here in Pennsylvania. Of course, there's extension, and then there's private consultants. So there's a variety of sources of advice that folks will go after. When it comes to climate change, pretty mixed bag. A lot of people have mixed attitudes about the concept of climate change and how much it concerns them as individuals. Even though there's a wide range of concern, familiarity with carbon markets is very, very low. And this makes a lot of sense because it is an entirely new concept in forestry at the private level, and especially since the markets have not been available to these non-industrial private owners. And this helps keep me employed right here. Kind of my little demand model for the kind of extension programming that we do. And owners are generally interested in learning more about how to be better land stewards. So that's part of that that makes us optimistic as far as the value of educating landowners and not just telling them where to sign up, but actually allowing them to become active economic actors, part of this larger system. And that's what we hope to do through extension. Okay, so preferred types of financial options. This is really interesting. This really spells out that the way that forest owners think about money is definitely not going to fit that model necessarily all the time about maximizing revenues. That they see maybe carbon payments as helping them alleviate their taxes. And so this is an example here of folks wanting more favorable tax policies, like that platform for improving, enhancing their income is one that they consider useful and meaningful. Cost share strategies, this kind of sharing costs also resonates with a lot of forest owners, which I'm going to get to here in a second. And a lot of owners are using the payments. They're thinking about these carbon payments as a type of cost share. So even though we talk about markets and payments for carbon, it doesn't always fit this kind of productionist kind of model of trying to make maximize revenues on their land. People are also thinking about cost share so they can afford management activities and reduce their tax burden and these kinds of things. And other people are just they don't see it as the financial aspect as being relevant at all. This is a paper that I recently had published in Society and Natural Resources, looked at the economic and ethical motivations for forest restoration using incentives in Mississippi, specifically looking across different ecosystem services. This was a qualitative study, and I came up with this theoretical model that has a little bit of like what we already understood about forest owners, in that they're really intentionally purchasing forest lands to meet these personal objectives, and their management actions are used to meet those objectives. But I added in this whole how does the money part fit in? And so when are they willing to accept some sort of payment? And this makes a lot of sense when they're producing a good, and this is the kind of some people own land because they get a lot of satisfaction out of being providers to society, goods from the forest and goods from their land. But when it comes to having stewardship motives or being responsible stewards, it's that cost share that really comes through. So they're willing to accept some help, but then they're also willing to pay some too. And this is wrapped up in that idea that if you have an ethical motivation, if you're being paid to do something that's morally correct, then how can you own that as being your own, motive, because you're being paid to do it? And then that kind of interferes with this personal achievement, good land steward kind of model. So there's understanding this cost share, where it fits in and where it might not, was really dependent, we found, on the context in which it was used. So whether or not the land was already in production was a really important indicator of how they perceived how they should be paid. If it was in timber production, they're actually asked to change their management actions, then they needed to offset their opportunity costs. where if it was land that was designated for restoration that needed to be improved, then it was more a cost share kind of thinking. Okay, so Calvin and I have been collecting names of a whole bunch of project developers in the US that are targeting non-industrial forest owners, and we just keep adding to this list. It just keeps growing, and that's because they're really coming in from all kinds of directions, and they're using they're not necessarily marketing themselves to forest owners. Sometimes forest owners are just wrapped into the bundle of landowners and land use in general in a region. We're going to focus today a little of our discussion more on the Family Forest Carbon Program by the Nature Conservancy and the Natural Capital Exchange, because both of these are in Pennsylvania and we've really gotten to kind of know them, so we can say more about them. And then the other thing I'll bring up here is that the contract designs across all these programs, we have found very wide range of contract designs. And I've decided to lump them into three groups: simple, moderate, and robust, in order to facilitate discussion about to compare and contrast, and to explain this study that that we just wrapped up. We're still writing the paper. So this is, I'm going to go ahead and call this preliminary findings. What we wanted to do was understand landowner willingness to accept for enrolling in a carbon market, recognizing that willingness to accept could mean that they're looking to offset opportunity cost or they're looking to get a cost share, but what are they willing to accept in order to manage for carbon sequestration services? And so we found 13 studies throughout the US that looked at the state level surveys, willingness to accept surveys. Some of them are regional studies. There were 36 mean willingness to accept observations that we ended up using in the model that represents about 20,000 landowners' opinions. So that's kind of the scope there. So we looked to categorize the attributes of the contract that were proposed within these studies, because a lot of these used choice experiments and contingent valuation, where they would ask, well, how much would you accept if there was a contract of this design, for example. We cataloged forest owner characteristics that were used in these studies, and of course the aspects of the studies themselves, like how did they collect the data, what were the sample size, response rate, all this kind of stuff. And in the regression analysis, a number of those variables were significant. Key was number of acres. Willingness to accept went down as numbers of acres owned increased, and attributes of the contract were all significant. So number of years, if the contract required a management plan, if there was a management restriction, mostly it was deferring harvest, and then what region the study was located in. I'm going to go ahead and show you how I took this regression analysis and used benefit transfer techniques, which is a fancy way of saying we adjusted the model to represent several kinds of contracts. So here is the mean willingness to accept for several kinds of contracts. The first contract is called a simple contract, which is a lot like the Natural Capital Exchange, where it's a one-year contract and all they have to do is delay harvest. The second contract has a 20 to 50 year span, and you delay harvest and you have to have a management plan. And this is a little bit more similar to the Family Forest Carbon Program. And then the robust contract is kind of your standard CARB program, 100-year plus contract, and delaying harvest and management plans are a fundamental part of those contracts. Another key part that we found in this study was that looking at the demand curves, we found that half of forest owners were willing to accept up to 75% less than the other half of forest owners. There was strong evidence of early adopters. And so we went ahead and parceled out, using this 75% rule, what early adopters were likely to get compared to what all owners were willing to accept, I should say. So so we see here that, and right now we're in the early adopter stage. So I'm going to focus on these numbers for just a second. in the simple contract, early adopters were willing to accept about $10.91 per acre. That's what we project, looking at historically what people said they would be willing to accept. And this is really actually kind of close to what the Natural Capital Exchange is paying out. We've heard numbers anywhere from like $4, $5 to $10. And then the moderate contract and robust contracts, these are falling within the ranges of what owners are being offered through programs that are similar, offering those similar kinds of contracts. So we feel like it is indicating the value of carbon markets to early adopters and potentially to all owners, and what carbon prices need to get to in order to appeal to early adopters and all owners. Another really important source of variation in willingness to accept has to do with the numbers of acres owned. The owners with smaller numbers of acres had to be paid significantly more, especially for more complex contracts. And that probably has to do with economies of scale, having to get a management plan, having to find a consultant, and when they don't already have one. It's like new territory. And so this variation I would say would be very, very important when it comes to understanding what kinds of prices are going to capture, carbon prices are going to capture what categories of forest owners. Now, I didn't want to just look at these willingness to accept numbers in isolation. So I went into the USDA's eValidator tool and pulled up, just for nationwide, the average amount of carbon stocks in private forests, and calculated the average rate of carbon sequestration. And I have those details on the bottom left, just so that I could assign it to some of the mean prices on the voluntary and compliance markets right now, to get a sense of what is the value of the average private forest acre in the US when it comes to its value on a carbon market. And I'm going to just point out really quickly here that this is not what owners would necessarily be paid. There is a middleman that is looking for commission. These project developers they're not doing this out of the goodness of their heart. They're looking to take a piece. And so just recognize that that's part of what's in here. But I just wanted to understand what is the value of these carbon stocks, and then compare it with owners' willingness to accept. And so what we find here is that voluntary market values exceed what most early adopters are willing to accept. So to me, that's explaining why we see all of these new project developers and programs just like popping up, because the voluntary market, and these programs are usually associated with the voluntary market, because the early adopters are at the point where they're willing to accept the price of carbon on that voluntary market. So yes, so these programs are coming up. Compliance markets are within the range that most owners are interested in, but the barrier here is not necessarily going to be what they're willing to accept. It's the standards set out by CARB, having to do with contract lengths, acreage sizes. Their forests usually have to be certified through SFI and some other places. So there's a lot of hoops to jump through in order to get to participate in a compliance market. And of course, the social value of carbon, though, it was nice to see. And this is based on, I believe, what was set by Biden as $51 per metric ton. The social value of carbon on an acre of private forest land far exceeds the cost of what owners are willing to accept. So there is definitely reason. It's the return on investment for helping support the transfer of wealth from through these carbon markets is definitely there, the social justification. Okay. And now I'm going to hand it off to Calvin, who's going to talk about his conversations with forest owners and the kinds of programs that they are considering.
Thanks, Melissa. That was a great job. I really like that slide about the social cost versus what early adopters are seeing, because that's, the early adopters are who we work with. We are the Lorax for the small private forest landowner. Really, we speak for the small private landowner. So the main programs that small private landowners are seeing are they're seeing harvest deferral programs. That's the no harvest one. That's the main program they're going to see. Then there's the improved forest management programs, pretty rare. Really only the family forest carbon plan, our carbon program gets into that for our small private forest owners. And then there are afforestation programs, which are plugged a lot by in policy and like papers about carbon and climate change, but it's pretty hard to do for small private forest landowners. We're going to talk about all these some more. So Melissa, will you advance me? Next slide.
It's being slow. Let's
Okay.
go. Oh, there we go. All right.
Okay, perfect. Thank you. So the most common program that we're seeing pop up are these harvest deferral programs. They usually have a contract length of between 20 and 40 years. Programs selling into CARB have a 125-year contract, which is really scary to a lot of forest landowners. But the actual harvest deferral is much shorter than that. And then there is NCX, or the National Capital Exchange, that's offering a 1-year program. It's got a lot of, it is appealing to forest owners, but does have trade-offs. Mainly they're looking at $5 to $10 a credit right now, and that's according to the last newsletter. So it's very low paying for forest owners, and generally a credit is an acre. I've seen 1.2 credits per acre, but it's usually 1 to 1. And also NCX is going through their Vera third-party review, and we expect them to be finished. They expect to be done in 2022. Right now, it looks like there's going to be some kind of cooling off period required for a forest owner going from NCX to another program. But I expect that we're going to learn a lot more from or about the future of NCX once the Vera review is done. It's an appealing program to landowners, but they also have a number of questions about it. So besides landowners having concerns, there are other groups that have concerns about these harvest deferral programs. I can tell you, I would do a lot of work with the forest products industry. So these are everyone from your forester, the commercial or the consulting forester, all the way through to the furniture manufacturers and the barrel manufacturers. They are pretty concerned about these harvest deferral program, because as more and more land gets locked up, that's less and less forest for them to work with and less potential supply. So there's a lot of concern among the forest product industry. Also, half of my title is wildlife educator. And as a wildlife person, I'm pretty concerned about these programs. In Pennsylvania, 4 to 7% of our forest is early successional, as defined by the FIA. Unfortunately, that's not anywhere near enough. We should really have 20% of our forest as early successional habitat. So locking up these forests is really not great for our early successional species like grouse, woodcock, and the golden winged warbler, just to name a few. And then also there are some real questions about additionality of these programs. As Melissa pointed out in the Woodland Owner Survey, most of these forest landowners don't harvest or intend to harvest. They generally don't own land with money in mind, and they don't have management plans. It's hard enough to get them to spray invasive species. So I think that assuming forest owners are going to cut is a pretty aggressive assumption, and it's not the best to build a case on. So there's some real concerns about additionality. All right, next. Now with these these harvest deferrals, we also see what we're calling a bidding paradox, especially with NCX. There's this 1 year doesn't seem like a lot, and it doesn't seem like it's the opportunity cost is very high. If you're like if you're in the middle of a 60-year rotation, if you're at year 30 in a 60-year rotation, you're like missing out on maybe $4 of income. But as you change forests and you change places, that cost goes way up. This paper by Mississippi points out that the opportunity cost for landowners in South Carolina is in some cases can be $60 an acre. And we're not seeing that right now in the harvest deferral contracts. So there's a huge opportunity cost, and it's really not being accounted for in the current harvest deferral, the current harvest deferral programs. All right, next slide. The next type of program the next type of program we're seeing is the improved forest management programs. Now, this is a lot more common in the large scale forest and the large forest owner type of carbon programs, but there's really only the family forest carbon program for our small scale forest owners. And when I say small scale, I mean anyone who owns less than 2,000 acres of land. That's what these programs use as small scale. Now, most of our forest owners consider themselves, if they have 40 acres, they think they own a lot of land, but it's like, you guys are not playing a big, this is a big pond full of big fish. So the Family Forest Carbon Program has two options. This is going to be kind of review for some folks, but for others, it's going to be pretty new. They have one that allows for light management of mature forests, and then one that encourages regeneration of new forests. And they create a credit by funding better forest management. So in the regeneration, they help fund managing threats to forests like deer and invasive species. They fund spraying invasives or putting in fencing. These are a 10 to 20-year contract that are tied to the land. That last piece is a little bit scary to some forest owners, but to other forest owners, they like knowing that they're being paid to do the right thing.
And I would say that they've even talked about their program being almost like a cost share, because they don't make claims of offsetting opportunity costs. They want better forest management, and so they're trying to help fund that. So they're building into that psychology.
Yeah, yes, they definitely, and they also allow forest owners to, and they allow and encourage forest owners to enroll in those like government cost share programs like NRCS. We're going to talk about that more in a second here. The concerns with this program is there's a lack of managers in Pennsylvania. The average forester is over 55, probably 57, I think it was. And they're looking to get out of the game. So we have a real lack of consultants and then a lack of applicators too. So it's tough getting this done. And this is also a lot of work that can't be measured, using remote sensing. You can look for a cut on remote sensing, but how do you check to see if you had success, spraying invasives with remote sensing? This is on the ground stuff that takes some real partnerships and some real infrastructure building to do. All right, next slide. So we're going to look at kind of like the typical example that Melissa and I look at. These are the Jacksons. I actually have two different Jacksons here. The two folks in orange are the Jacksons, the forest owner, and the one in the middle is my colleague, Dave Jackson. He and I work with the Jacksons a lot because they're like the perfect forest owner for an extension, from an extension perspective. They have a good amount of land. They have 130 acres. 100 of it is like mature, classic, Appalachian oak forest mix, and they do a 30-acre seed tree harvest as part of the golden wing warbler habitat project. And that's through the NRCS. So, they're in all of the programs that you can be in Pennsylvania, and they talk to everybody in natural resources, from the NRCS to me, to the Audubon Society, everybody. They talk to everybody and they know everything that's going on. So of course they started looking into carbon as soon as it came onto the scene. They looked at NCX and they were less than pleased with what they had to offer. They got, they estimated they would get about $8 an acre from their 100 acres of mature forest. And so they passed on that. And instead they enrolled in the Family Forest Carbon Program, and they're set to make about $31,000 a year over the next 20 years. And that's for both the mature harvest and to do invasive control in the seed tree. So they're pretty happy with that. Now, just to be fair, we did an average annual net present value with a 4% discount rate over 20 years. NCX comes out at $2.6 per acre per year versus the Family Forest Carbon Program, which is about $4 per acre per year. So, they, from a financial perspective, they made the right call there. So this is just kind of like what we're seeing for our average forest land. Now, there is some talk of afforestation programs. Right now, the only program that I'm really aware of when it comes to afforestation is green trees. And that's mostly focused on the West Coast. Now, afforestation is really cool. Everybody loves afforestation, from policymakers to forest owners. So you don't have to talk a forest owner into doing afforestation. It's really hard to do. So there's not a lot of land for afforestation in Pennsylvania. Oh, when you're getting ahead of me. So, most of what's going to be forest on the East Coast is already forest, or it's becoming forest, whether you want it to be there or not. So it's hard to do that. Now, all right, now you can give me the advance. Now, it's really popular. Oh, we're jumping around here. So this circle right here is why afforestation is really popular in policy circles, and why it looks really good is because you can get a lot of good carbon sequestration. But the problem is, all right, now you can advance it, Melissa. Most of our landowners are going to be dead before they see any financial return from that. And they're going to be well and truly dead by the time they really start to see money from that. I mean, again, most of our landowners are in their mid to late 60s. And that was when that survey was done, which was mid-teens. So now they're getting into their 70s. They're not going to make it. The average land rotation is 10 years. So that land will have changed hands 4 times before afforestation really starts to pay off. So companies looking to do afforestation really have to figure out how to handle that. We've been in contact with one company looking at doing a short-term rental. So we'll see how that goes. The other issue that I see with afforestation, and not only I see it, but the industry sees it, is infrastructure. There's very little commercial nurseries on the East Coast. Even in the Southeast, where there's a lot of planting. I just was at a thing with Green Trees, and they said if they put every, hardwood tree from the Southeast nurseries in the ground at a 10 by 10 spacing, they could plant 80,000 acres of forest. That is not a lot, especially coming from an area that does some of the most planting. So there's a real lack of infrastructure in the afforestation. And finally, there's a huge concern from the agricultural sector. While to a lot of us folks in natural resources, we want to see those pastures by the creek side get turned into forests. Dairy farmers in the ag sector gets really concerned about losing agricultural land. Also, the folks that represent them in local government are very concerned about it. I was at a thing not too long ago where the local local congressional representative was talking about the loss of ag land. He was very concerned about it. Now, when they're talking stats and they're talking the loss of ag land, they don't care if it's selling prime ag land to developers or if it's planting old farms and turning them into forests. Loss of ag land is scary no matter where it's coming from. So, when afforestation is brought up, it needs to be very carefully discussed, especially on marginal farmland. Okay, next. So let's talk about our landowners that are currently enrolled that we work with and we know. So they are very ethically motivated to pursue these programs. They really care about climate change and the environment, and they want to make sure they're doing the right thing. They're also, like the Jacksons, they're out here, they're coming to extension stuff, they're reading all our articles, they are on top of it, and they're looking for a little money to supplement their income because owning a forest is expensive, especially in Pennsylvania. We have 10% of the known invasive species in the US. It's a lot of work. Now, the problems they face are you have to have a good chunk of land to get into these programs. You have to meet certain requirements like stocking requirements. And for some of them, you also have to be able to find a forester, which can be very difficult. So here are some of the questions that I get a lot from forest owners. How long is this program? Not every program tells you up front what, contract length. Some of them make you dig. Or some of them it's like, well, you're like in carb, like you're doing a harvest deferral for only 12 years, but you're in it for 125. That's really scary when you're not trained to think of the long-term like foresters are. Landowners don't think like that. So these big contracts make them scared. The next one they're going to ask me is how much money can they make? So programs need to be right up front with that because that's what landowners are thinking about. Now, the third one, this is not normally what you'd expect, but a lot of forest owners want to know what impact they are having on the climate. They want to make sure that this program is actually doing something and they're not contributing to greenwashing. Going back to the Jacksons, they're really involved and they really care about what they're doing. So they want to make sure that they're, helping do the right thing and they're not covering up for someone that's polluting or doing the wrong thing. So
I think they also don't want to be duped. They don't, they're like, if they're going to do this, they're going to do it for the right reason and they're going to be upfront about it. Yeah. Yeah, no, that's a great point. Yeah. And then finally, what happens with land transition? Again, our average land tenure in Pennsylvania is only 10 years. So there's a lot of land transfer, even in these short contracts. This is something that they're really concerned about. And it needs to be made clear. We work with our agricultural law center here at Penn State to, help folks understand it, but it's complicated for us. And then a third one, which I just remembered before we got in here, is taxes. Where does this money go in my tax return? Is it general income? Is it commodity? What happens with it? I don't know the answer to that. Right.
All right, next.
I think that's a question that has yet to be answered, and it needs to be done carefully.
For sure. Okay, so here are some systemic causes that we're seeing now in the small landowner stuff. There are definitely some bad actors in the sector. This is a great example, and we found this example organically. A large sawmill that has some land near us emailed me because they were approached about a deal that looked too good to be true. So we dug into the firm, and it turned out one of their founders had just gone down for fraud. So I don't believe that sawmill worked with that group as a result of that. Then the next one is there's just a real lack of definitions and of standard definitions across the sector. For example, one land, the Jacksons, they looked at NCX and they're like, well, how does NCX tell me this is sequestering carbon to not touch this forest, whereas Family Forest Carbon Program told me that doing at seed tree harvesting was sequestering carbon. These two seem like the opposites. There needs to be some real standard definitions. We've seen this in the food industry with the USDA with their definitions around food and meat. So we could definitely use kind of like an EPA climate inspector or some real set definitions there. That would be very helpful. And with that, I'll hand it back to Melissa.
Okay, well, we're on our last few slides, and we've got some time for questions, so that's great. So Calvin and I started the Forest Carbon Markets 101 series in 2019. We literally were teaching what we learned. It was very much know as you go, and what we did is we did webinars talking about how forests store carbon in general, how carbon markets work in general. And then we invited a bunch of experts to come be part of panel discussions. We had representatives from actually from the Family Forest Carbon Program and National Capital Exchange come and talk, because we recognize that we are not the all-time expert at this stuff. And then we have I think we have up now to maybe even more than 10 extension articles on a variety of subjects, including managing forests under climate change. All these concepts are interrelated, but the financialization component, it makes it more feasible for a lot of people to start thinking about and justifying more intention in managing their forests for carbon and for climate. And we were surprised about how much attention this program got. I think last count, it was about 2,600 participants from people all over nationwide, a lot from the Eastern US and Pennsylvania, of course. But we had even folks internationally joining. And I think there was just a real gap in training and educational programming for, Joe Landowner, who really is starting at the very bottom and thinking, okay, maybe it's time to start thinking about carbon and whether or not that can be part of my management objectives. And this program, with its success, and I do a lot of program evaluation stuff, so I was able to capture its impact enough where we were able to successfully secure a grant from NEFA recently. And I know there's some people on this call right now who are partners with us, and I haven't reached out to you, so here is your notice. If you didn't know, we had some folks write us some fantastic letters of support. And this is an unofficial notice, by the way. NEFA said we can't do an official notice until they do, but they did support our proposal for an education program, forest owner carbon and climate education program for the Eastern US. It'll be over 4 years, and we have secured collaborators from about 13 universities, including here at Michigan State, Michigan Tech, a bunch of folks in the Southeast. We've got collaborators with the Northern Forest Hub and the Southeastern Climate Hub. And we're very excited because what it's going to involve is a lot of co-created curriculum to help adjust for regional differences, but also help provide that common language, which we think will be really helpful in getting people the confidence that they can be part of the conversations about carbon markets and where they can go. They're going to be provided online training modules, but then also to help reach owners. We're going to do some more broadly, there will be peer training opportunities, professional development, especially for extension. There was a real need in forestry and natural resource extension to train people to get caught up on what all this is. And then also a special focus on working with minority landowners, women and African Americans in particular. And so we were able to secure collaborators that are going to help us do that. And so I'm very excited. I can talk more about this if we want, and all the people that are going to be on board, but this kicks off in January. I will point out that this learning exchange series is part of one aspect of this project, and that is the sustainability campaign. We're hoping after 4 years to have an established education program with a vertical community of practice where there is a pathway to communicate from the decision makers up top to the individual landowners, the private folks on the bottom, that there is a flow of information in both directions, because that's really what's missing now, is that you know, us in academia and in policy, you know, I got all these things cooking, and the people who are supposed to make it happen, those forest owners, they have no idea what's going on. And sometimes we forget what their constraints are as far as how they think about how to manage their forest and what kinds of policies and programs they're going to find acceptable. So the vertical community to practice is going to be platformed or supported through a newsletter that can reach a broad audience. And this exchange series is going to provide us some fodder for that newsletter to help everyone keep on board with what's the latest research, what's the cutting edge here. So very excited to launch this next year and get it kicking. So that concludes our presentation. And thank you so much for being part of this. And feel free to reach out and contact us at any time. But I think we can take some questions now.
All right, thank you so much to both of you for a really interesting look into the landowner perspective here. Much appreciated. And we have a handful of questions that I'm sure, I'm sorry to say in advance, we definitely will not have time for all of them, but we'll do what we can do. Okay, so first group of questions here. I'll ask a few that have to do with the study in particular. So you keep your slides open and for reference if necessary. So a couple of questions, just clarification. Regarding the payment rates that you have, are those per year payment rates or for the life of the contract?
It was per acre per year, all of those willingness to accept numbers that I presented.
And then regarding the questions that were asked, when the landowners were asked to delay harvest, were they provided a range of years? So delay harvest by 5 years, 10 years, 15 years, was that included in the language? That
level of detail we were unable to capture, unfortunately, with such few observations and the diversity of the way that the studies were set up. So we ended up doing a binary kind of coding where it was, if it was required that there would be a delay in harvest, regardless of how long that delay was, then it was given a 1. So it's really just sort of an indicator of a presence or absence of those characteristics.
Got it.
I wish that we could have gone, we tried so much to really parse things out, but we had to do more lumping than splitting. That's what I told my grad student when she made the variables.
Imperfect data or all.
That's right, existing data.
Impressive data set that you have. So
can't combine it all.
Another question regarding your assessment. Did you ask whether the small landowners had any interest in additional payments or opportunities regarding co-benefits or ecosystem services, or was it all focused on carbon?
So I will say that these aren't my surveys. I just looked at other people's surveys, and yes and no. So in some instances, they did ask about other benefits, but primarily they were focused on carbon. What we did do is we found some studies that asked them willingness to accept change management behaviors to engage in the type of forestry that did help elevate carbon sequestration. And so it had carbon related benefits, but the purpose of the payment was for like wildlife habitat. And so what we found was that the payment levels were pretty much similar. There was no difference between the studies. And so to me, that was a real indicator that the willingness to accept numbers have a lot to do with the feasibility question and opportunity cost question. And, what kind of good or service is being provided, is important as well, but that is maybe not necessarily the only pathway to go. When we talk about enhancing carbon on private forest lands, it doesn't have to be linked with climate and carbon. We can do that through other means as well. So I think that's the implications there for sure.
Yeah, very interesting actually that you would see, you didn't happen to look at that same breakdown among the early adopters versus the non-early adopters, did you, whether they are more motivated by certain things, certain dimensions than others?
Right. I don't know if we can, but I think that's a great question. And I think I'll take a look and see if we can parse that out to see, if there is because I think that's a reasonable hypothesis that there may be an association between increased interest in, say, what, biodiversity, and then willingness to accept and carbon. And so,
Yeah, that'd be interesting to see. So your results regarding pricing are very interesting, right? Regarding what folks would be willing to give to these projects for, and especially interesting because they seem like it's not so far beyond what prices currently are, right? Your results seem to suggest that if the voluntary market were where the compliance market is, the majority of private landowners would be getting involved with this. Does that strike you as true, right? If the prices were to go up by not a dramatic amount, do you expect that price, that would do it, or do you, what are your thoughts there?
Yes, I think that the price of carbon certainly has to increase in order to attract more forest owners. The early adopters, we can only really hypothesize why they choose to be early adopters. If we look at the ethical motivation, then they get that green feeling of being part of the climate solution. So they accept a lower price. And because, even if they're having to look at it as a cost share, they pay me a little, I put in my bit, and then I get this lovely green feeling. And then there's also the straight up opportunity cost associated with changing forest management. So that would be the harvest deferral kind of concept, where they're foregoing revenues in order to take advantage of another revenue source for some designated period. And so this that depends on how they managed their forest before. And there's some owners, if they're not planning on harvesting, then the opportunity cost doesn't really make a lot of sense to them. They're going to probably get involved because they want to pay their taxes. You can kind of see how it's all sort of unfolding. It really depends on how they approach their management of their forest. And right now, the early adopters are thinking I want to be part of the solution, and I want to help pay my taxes. Whereas I think it's the people that are involved in more production style forestry are waiting for the prices to go up in order to make it more feasible.
So regarding the tax question, there's a question here wondering, so does this factor into people's minds at all, the possibility that in two ends, one on if I engage in afforestation, that my land value will be higher and thus my taxes will be higher. And so that will discount whatever carbon project money is that already baked into folks' responses, do you think? Or is that an additional concern that
in this study, no, the afforestation was not an element in this study that I recall. Oh, it didn't. My student did this, so I'm I don't remember reviewing those studies with her that was a major element. It was more about natural stands and production oriented forestry, which is a kind of afforestation, but not really, I guess. Where's that line? These are planting trees, but for different reasons. And Calvin, but you have some insights, I think, on this, right?
Yeah, I don't think that would really impact taxes, taxation or tax value that much. Generally, forest land is just taxed at the same rate. Stocking and age doesn't generally matter, unless that's the states that I've been in. I haven't seen any states where they're well, we got to set an appraiser out there to evaluate your timber. So I don't think it would, but it's an excellent question, and that's just another one that we need to get an answer to. Right now, what I've heard on the tax front is just from folks who have sent individual request letters to the IRS for a ruling. And it looks like a lot of it's coming back as general income, but as more programs come online, there's talk of renting carbon and stuff like that. We need to get some more information on that. We actually work with a farm educator from Penn State, a farm business educator, and we're trying to find a tax professor at Penn State who would help us figure out and navigate this tax law a little bit better, because that's not anything Melissa and I are really trained to do.
Yeah, it's any of these questions deal with multi-sectors, multi-discipline, right? It's hard for landowners to understand, hard for researchers to understand, hard for everybody to.
I think that the market is getting out ahead of the tax law here. And so, it would also be great if we could have some policy or some guidance from the IRS or some laws written. So that would also be great. But, everything that everything we've learned about forest carbon, it's, this is always an evolving market. So I got to say it again, it's an evolving market, and this could change really fast.
Yeah, we actually made a decision quite a while back where initially it was the instinct was to tell people how to sign up. And then we realized that that was a bad idea because every year it changed, even for the same programs. And we really wanted to teach people, like how to fish rather than to just, give them a fish every once in a while. So it was a tall challenge because, it's hard to learn a whole new industry and to navigate something that's emerging like this. But the response that we've gotten is that people are ready to take on that challenge.
So we are at our time. And to be honest, just one more question as a.
We'll keep it short.
Okay.
Short answer.
And I'm sorry to folks whose questions I was not able to address or ask, but so Calvin, you both suggested this a little bit, and Calvin, you definitely were explicit about it. A question about additionality, right? Concerns about, well, if folks weren't going to harvest in the first place, and some of your numbers showed 40% of folks didn't harvest in the last 5 years. Doesn't mean they don't harvest ever. How does that make you feel about carbon markets? How should we feel about carbon markets? If you're skeptical, should we all be skeptical? What's the story? How do we gain more assurances there?
Well, this is going to get really climate tumor really fast, so I will keep it as positive as I can. I think that carbon markets are an excellent rearguard action against climate change, but we should not read into them as the end all be all. I think fighting climate change takes, this is something we say at the beginning of all our presentations. It's a really complex topic, and relying on, forest carbon to do that is it's not a great idea. I think that getting at the additionality is going to require a lot more nuance than just a binary, like, yes, they're going to harvest today. No, they're not going to harvest today. And I used to be an industrial forester, and even when you were going to cut some, even if you had a plan in place and you bought a sale, you never got into a sale that first year, even after you bought it. Usually doing a harvest takes a couple of years to get in the ground or to get into. So I think that it's important that we get out of a binary in these assumptions, and that we also, don't rely on carbon markets to do all of the work of climate change.
I would say too that, just like Calvin said, that there needs to be more innovation as far as identifying what kinds of baselines are acceptable and the counterfactual. So while with an individual parcel, we cannot determine a counterfactual for an individual owner, but maybe we can say something about a region, about a category of forest owner, and use that as the baseline. And that's where more social science is needed. Yay, I've got a job now into the future. And I think we need to innovate in that way. And of course, Calvin and I are going to be pushing for forest management plans. That's the other solution too.
Yeah. I would love it if more forest owners were cutting. I'll be very honest. The wildlife half of me really wants to see a lot more trees hitting the ground, and so does the old industrial forester in me. It's we gotta make sure. I would love if we had more this binary with more trees than it really is. I'll be very honest.
Well, thank you both so much. Thanks to all of folks who came to the presentation. Thanks to Calvin and Melissa for the presentation. Such great insights there. We look forward to seeing more as more of this work unfolds.
Yeah, sounds good.
All right. Have a lovely afternoon, evening, everybody.
Thanks for letting us speak. You guys all take care.